Hello everyone. Today, I have prepared a presentation that is a bit different from the ones I have done before. We will learn a trading strategy that is very powerful and can yield very high profit margins, if applied correctly. My request from you is to watch this video, as well as my previous educational videos, carefully and without skipping. In your free time and without being distracted, keep in mind that stock trading promises great potential for wealth accumulation when the trio of patience, discipline, and technical analysis are fully applied. But neglecting even one of these elements can lead to disastrous results, even bankruptcy. Before we move on to our strong and profitable trading model, don't forget to subscribe if you haven't already, press the like button, and turn on notifications. As always, let's first bring our indicators on the screen, carefully optimize their settings, and take the first step in increasing our capital by learning our strategy rules. Let's get started. The trading rule for a long position is as follows. Rule 1. The price, Bollinger Band upper line, and also the pivot standards line must be above the 200 parameter Dema. Rule 2. The price must close above the upper line of the Bollinger Band in an upward direction. A trade can be entered with the closing of this candlestick. The stop-loss level is placed below the lower line of the Bollinger Band. The first profit target is at the 1 to 1.5 level. If the trader prefers, partial profit can be taken when this profit rate is achieved, and the stop-loss level can be adjusted to the cost level to pursue higher profit rates, or the entire trade can be closed with the current profit. As you can see, in this trade, we preferred to take partial profit when the 1 to 1.5 profit level was reached, and tried to carry the trade for higher profits. But when sellers suddenly made a large volume sell in the market, the price suddenly dropped below the last pivot line. We did not insist on keeping the trade open, and closed it. Remember, there should be a certain scenario in your mind before entering a trade. If the market moves far beyond your scenario, stubbornness can lead to significant losses. The trading rules are quite simple. Let's see another trade in the same way. Remember that for a long position, the price, Bollinger Band upper line, and pivot line all must be above the 200 parameter Dema. Once these conditions are met, we will enter the trade when the price closes above the Bollinger upper line in an upward direction. Now that we have learned all the conditions, let's open trades in suitable areas on the chart one after another, and see the overall success of our strategy. I would like to make a small but important reminder. When all the conditions are met, if a candlestick passes the Bollinger Band with very low volume, i.e., a small-sized candlestick or with a pin bar candlestick, entering the trade with a more satisfactory candlestick will protect from possible losses. The 1 to 1.5 profit target has been reached. It is up to you whether to close the entire trade with total profit, or continue with partial profit taking and zeroing the stop-loss risk. Let's take a quick look at a few examples. To demonstrate how profitable and robust our strategy is, I opened trades at every point where the conditions were met on the chart. For you to see with your own eyes, we reached a total of 1 minute 18 seconds and 5 milliseconds profit and 1 to 6 loss close trades. This winning rate is truly impressive. If you have any questions or ideas to make the strategy more profitable, please write them in the comments section. Let's all win together. Goodbye for now.